Hello, traders. This is Joanne with Succeed in Forex. Welcome to our Forex news broadcast for Monday, April the 28th, 2008. The headlines earlier this morning out of Switzerland read, last week European data knocked off euro from a record 160.19 high. The dollar rose last week against a basket of major currencies, boosted by a growing view that the Federal Reserve may stop cutting interest rates. The U.S. economic data last week showed resilience in some sectors, such as the labor market, contrasted with a sharp drop in business sentiment in Germany. That news, combined with the ECB's policymakers' comments highlighting worries about excess volatility in foreign exchange trading, lowered expectations for a rate hike in the Eurozone and hurt the euro. The percentage chance that the Fed will keep its benchmark interest rates unchanged at 2.25% at this week's meeting rose to about 26%. Just a week ago, future markets were pricing between a 25 to 50 basis point cut. Meanwhile, Forex participants were paring bets that the ECB's next move would be a hike in benchmark interest rates. On Friday, the euro dollar was down at 156.26 after dropping as low as 155.55 intraday, a 3-week low. The dollar Swissy traded down at 103.42, and the dollar yen was up at 104.43. The pound dollar went up to 198.47, rebounding from an intraday low of 196.77. Last week's rally in the dollar may have also led some investors to sell the currency ahead of the weekend to cash in profit. On Friday, the dollar had limited reaction to a report showing the U.S. consumers' confidence fell for a third straight month. In Europe, the IFO, German Business Sentiment Index, showed the biggest monthly fall since September 2001 on Thursday, taking the April headline number to a 2-year low. Together with a soft Eurozone manufacturing survey, the data knocked off the euro from its record high of 160.19. Asian session had a steady open. The dollar was slightly weaker in the Asian session as markets pondered the critical FOMC meeting on Wednesday. The euro dollar crept up to 156.78, and the Aussie dollar trended towards 93.80. While a significant portion of the market is looking for further downward pressure on the dollar, they are still saying that a shift now is premature. The bearish expectation on the dollar revolves around the lack of real fundamental change in spite of the German IFO collapse last week. The Fed is widely expected to cut 25 basis points, while the markets are betting the accompanying statement will be more optimistic on the U.S. economic activity and signal concerns over inflation, potentially signaling the end of the Fed's easing cycle. This outcome would give the dollar some support. However, with the NFP expected to fall by 75,000, it is an indication that further damaging data has yet to be seen. As data continues to soften, the Feds will need to adjust rates and a return to the dollar weakness. In addition, with energy prices elevated, it will be difficult for the dollar to sustain a rally. In Japan, retail sales beat expectations, climbing year-to-year 1.1%, with fuel and food sales being core drivers. So overall, it looks as if the strong inflation data has pushed up actual growth figures. Given last week's nationwide core CPI's jump, which caused a sell-off, we are expecting the BOJ to hold rates this week, and the probability of easing this year has dropped considerably. This concludes our news for today. Thank you for viewing, and we hope this is benefiting your trading. Before we sign off, we would like to invite you to visit our website at www.succeedinforex.com. There you'll find information about our Traders Training Center, where our motto is Traders Helping Traders Succeed in Forex. You'll also find a link to our Yahoo forum, which is also called Succeed in Forex. We hope you'll visit us there soon. We hope you'll be able to join us tomorrow for our Forex news broadcast, and that you have a great trading day. So until then, Happy pipping.